Welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will discuss monetary policy and the Nigerian households. Mr. Kalu Aja, a financial analyst, joins me virtually for this conversation. Thank you very much, Mr. Kalu.
How are you doing? Thank you and good morning.
And it's great to have you on the program.
My pleasure.
As the Monetary Policy Committee meeting begins today, I want to begin by asking you whether the Central Bank of Nigeria's inflation targeting has succeeded. We noticed that between February and July, we saw 800% basis point hike to target inflation. But we just seen it beginning to ease from July. In July, it was 33.40%. And of course, in August, it eased again consecutively for the first time, 32.15%. How has this impacted households? Because it has to just connect with the households.
Well, to answer your first question, has the policy of tightening worked? The data suggests it has not. Like you said, inflation has kept on going up, not just the core, but also the food inflation, which is the more important driver of inflation in Nigeria. The trend has been up month and month and month, even though the Central Bank of Nigeria has all rates to try to reduce the volume and velocity of cash in the economy. That suggests that the key driver of inflation in Nigeria is not really the monetary expansion alone, but the supply chain issues caused around food. The insecurity in the food-growing areas, the lack of infrastructure has reduced the volume and flow of foods from the farms to the cities. And this food inflation, it's what's driving inflation. I mean, the consumer price index, published by the Nigerian Bureau of Statistics, shows that 51% of the basket, the CPI basket, is based on food. So food is driving inflation. Hence, if you simply increase the monetary policy rate, it will not have an encompassing hold to reduce that rise in the price of inflation. Let's now go to the second question. The impact on the households. The households have not seen a fall in their expenditures because the average Nigerian household spends about 7% of the budget on food. And food has been going up in price, and as the MPR, the inflation to tamper down inflation, has also gone up. So you've seen Nigerian households struggling with higher interest rates on loans because the MPR is high, but also struggling with higher food prices because we haven't increased the supply of food. So the Nigerian household is being squeezed on both sides, both on the high cost of food and the high cost of credit to even afford that food. That's where the Nigerian household finds itself right now.
Really challenging. A squeeze on the interest rate for loans and a squeeze on the price of food commodities. You just have to find a middle ground on how to navigate this period. Now, apart from that, we're seeing electricity tariffs, amongst other things, affecting the price of commodities. But what should be the thrust of the MPC? Because we are talking about MPC that impacts the households. Major complaint has been that most of the policies around monetary policy doesn't tie into the households in Nigeria. So what should be the thrust as this MPC meeting holds?
Well, the CBN governor has said, Mr. Cardoso has said he wants to go back to traditional central banking, which means data-based decision-making. So if interest rates go up, he wants to increase the monetary policy rate. And he has done that. That's why the basis points are got about 800%, like you said, about 800% rise in the monetary policy rate because he's moving in tandem with what the inflation is telling him. We've had 2 months now of inflation, the core coming down. Food has not come down in tandem with the core, even on a face value. So I think for him, he's going to ask himself, should he reduce MPR because core inflation has come down and ignore food and perhaps energy that are, the volatile parts of the inflation number? That's the decision point they have to take. Do we bring down cost of credit, allowing monetary expansion in the economy because we have seen a 2-month downtick in the rate of growth of prices? Or do we still focus on that because we'd like to control the price of food? The answer is obvious. The Central Bank of Nigeria cannot control the supply of food or even PMS, energy, that is driving the inflation rate in Nigeria. So they might have to think outside the box to say, okay, how can we reduce monetary expansion but still give the Nigerian household an allowance to breathe. That's what they have to come up with. They've got to get innovative. It's not going to be an increased basis point or increased CRR, but they've got to really go in and get innovative and say, we'd like to stop the banks and the lenders, the large lenders from getting access to capital, right? But we want to allow the Nigerian households get access to cheap funds. The SMEs need lower MPR to borrow to stay in operations. In the end, the central bank has to understand that they are also an economy that is not creating jobs and productivity. And this is enhanced if we get a cheaper cost of capital. So this is what they're going to see in front of them. And I think the answer is they've got to get innovative outside their traditional methods of increasing or reducing CRR and cash in circulation and cash in deposit, and say, how can we allow credit flow to the SMEs whilst restricting the ability of cash flow to the multinationals and especially to the dollar base of the economy? That's what they have to come up with. And hopefully I wish them the very best in that.
Yeah, very important. And just like you rightly said, in their previous statements, the MPC has called for fiscal policy alignment to address the economic challenges. People talk about fiscal policy, but one component of fiscal policy is trade and investment too. That's very critical, just to put it out there. So based on your assessment, what are the critical policy interventions that can bring relief to households? We have seen several from this administration, which is over a year now. But when you look back at several interventions and what is happening now, and the reality that hunger is not like a unifying factor in the country where everybody is really, really reeling out the expressions of the challenges they are facing, what is a significant intervention that will really make sense to a household in Nigeria?
Yeah, I've been arguing for more than a year now on the need for the government to essentially increase the supply of food, and doing this by saying we're going to allow food imports to come in with zero or no taxes for a limited period of time. I've been making that argument. The government has said, yes,
we have a 150-day arrangement for food import, yes.
Yeah, I've seen that.
Several food items, yeah.
Yeah, we've seen that. But I read the guidelines around that. It's so bureaucratic, very, very bureaucratic. They've made it so you can't do it if you're not a big player, in quotes, nor do you understand the rules and all that. I would have allowed a 90-day no holds bars import of food across the borders. And what you're simply doing is that you're losing customs revenues. So the customs revenues become the stimulus. We've spent more on direct stimulus of 5 billion to buy rice to the state government. We spent more on that than perhaps how much we would have lost if I simply told the customs for 90 days, allow food and everything to come into the country so that the prices in the Nigerian markets fall. 90 days, you reduce the pressure on food. If Nigerians can buy a bag of rice for 20,000 naira, that's the biggest stimulus that you have done. That's a salary increase, minimum salary increase for everybody in Nigeria at the cost of loss of customs revenues. So they've got to go direct into that. Nothing else can be done in 90 days that would impact Nigerians than a ban or a reduction in the import duties of food in the next 90 days. Nothing else can be done as quickly as that. You can't grow maize and deploy it in 90 days. You can't. It's going to stifle that initiative. Like I said, food inflation has still not come down, even though they have announced this policy. The policy has got to be something that can be done the next day, not the next quarter or the next year. It's got to be something that the importers will say, wow, let's import food today. Let's get the food in. Let's use that food to then spread into the market. Prices come down, inflation comes down. Then medium term, you can talk about increasing acreages for agriculture, facing the insecurities. But right now, the issue is the high cost of food. So you address it as an emergency. If you are sick, the doctors don't ask you they do triage. They don't ask you taking your vitamins. They go straight, they cut off your clothes, they put the stuff on your heart, they pump you with current to get you back up. There's no time to ask you if you brushed your teeth, if you've combed your hair. It's immediate emergency trauma. And that's what Nigerians are going through. So you get the food in there, you drop the bureaucratic issues of customs didn't say, let the food come, 90 days, no hold bars, and then you see an immediate impact in the economy.
You just said something very critical there, the bureaucracy, because I know it even took some time before the committee, the finance ministry and customs sat down to set out the framework for implementing this. And we've already eaten deep into the 150-day window. So it's very critical, again, that it's being rejigged, like you said, not just big players, but it's opened to the entire populace so that we can be inclusive. And we appeal that the government looks into this, especially Finance Ministry and Customs, to ensure that this waiver works for everybody. Because about the households, anything aside that, you talked about 20,000 naira per bag of rice. And that may be challenging, but of course, even the 40,000 naira bag of rice should be even accessible. And then we can look at it coming down when this waiver is on. But what you said is very critical at this time. Tomorrow is the D-Day for the MPC meeting. And I would like to see what do you see happen? I mean, decision day, we've seen developments around the US Fed. US Fed has cut their interest rates, Bank of England, and of course, the expectations from the European Central Bank. But should it be a hold or a cut in the interest rate or another hike at this time?
Well, we know he can't hike. So out of the three options, we know that the Central Bank of Nigeria is not going to hike rates. So it's between holding and cutting. The prudence person in me tells me that before the floods, 2 months I felt was still not enough to reach a decision on reducing it because of the food inflation has still stayed sticky. So I would have said maybe hold. But I think now with the food issue caused by the floods that we see from the north east coming down, it's going to get to the south pretty soon. You're going to have a disruption in food supply, which means that it might be in the best interest to perhaps go in advance of the rising cost of food and perhaps cut just to signal that, listen, we are getting ahead of the potentially rise in food price and cut. So between hold and cut, I would say proactively go towards cutting. But the data says hold and just watch the next quarter. Yeah.
As we wrap up, what do you see as the outlook for the fourth quarter of 2024? Generally, monetary policy and, of course, the impact from the fiscal policy side.
I think the answer now has got to be muted with the floods. Before the floods came in, I was seeing some green shoots. The ASAP was spending. We're going to spend some money on the social side, in the farms, in credits. I've seen some green shoots there. The Dangote refinery, major achievement for Nigeria, is now ready to work. So if whatever happens, the cost will come down a bit. Nigerians say the cost is still up. No, the subsidy is going to come down a bit. So the pressure on the balance sheet of Nigeria, the dollar balance sheet, will reduce significantly. Also, exports from the Dangote refinery will start to go up month and month from today. So those were good things that we're seeing. Even the energy volume, 6,000 megawatts up. So good news. The floods have sort of put a damper on that because I know what happens to food, and those prices go up, it reduces the consumption power of Nigerians. So you're going to see, this will show up, I believe, in the fourth quarter, and we'll see the numbers in the first quarter 2025, where there will be a rise in cost and a fall in consumption and a fall in basically economic commerce. Maiduguri has no commerce now. So you've got to remove Maiduguri out of the GDP numbers. So imagine you doing that. And if Maiduguri doesn't have to go down belt, it's going to start to affect those other state capitals. They're going to take those capitals out of the consumption index and, of course, the output index. So that's going to be a direct effect on output in Nigeria, right? And that's just where the problem is. But let's hope that the positives outweigh the negatives. If we can manage this properly, I heard the former Minister of Agriculture talk about how dry season farming came about because of the flood that happened back then, and they were able to distribute seed and then farm on the flooded plains to increase the output of rice. So that when there was supposed to be a drought in food, we're able to increase the food output because they farmed on those flooded fields and they grew rice. So that sort of thinking outside the box, turning adversity into wins is what Nigeria needs. We can't fold arms and say floods are from, it's from God. Rains are from God, but sometimes floods are from man. We should have dammed that river a long time ago. We didn't dam it. So it's part of we have the money to do it. We spend a lot on conferences. We should spend money on mini dams so that the farmers use those dams to grow output. So let's turn this tragedy into success, into a win for the Northeast and for Nigeria by taking advantage of this unique body of water to grow agriculture. So down the line, it becomes a positive point. We can say, oh, this happened and we did this. I've already seen the example from Mr. Additional when he was Minister of Agriculture. So that's my take on the economy. I'm hopeful that the policy guys can get their act together and turn this strategy into a win. Yeah.
And in 1 minute, to the households, who are the ones going through this phase? What's your word to them this period? Because like I earlier said, hunger is a unifying factor, but of course, we need them to really be inspired with hope.
Well, it's tough. The 70,000 has not yet started. New minimum wage has not yet started. They've been under pressure with paying more and more taxes. I would just say monetize what you can monetize. Keep your head above water. You have to take credit, borrow at a cheaper rate. It's tough out there. There's not much advice you can give to a household that doesn't have the means to spend, invest, and raise credit, other than cut down on the expenditure. But what are they actually spending right now? So it's a tough outlook if you're Nigerian, living in Nigeria, any Naira right now. There is no, should we say, savior on the economic scene coming. All we're talking about will happen in a quarter from now. So we just have to stay hopeful and, take your options when you see them, monetize those assets you're not using, try to spend on your necessities, and just hope that we can get through this times. The government is not really doing a lot, so you take care of yourself by yourself. Form a cooperative, see how you can share costs. Do those simple, basic things that you've done in the past that have worked for you. Don't wait for the government. Take it upon yourself. Do what you can do and keep your head above water. Tough to say, but it's really what it is right now.
Yeah, I like the part of keeping your head above water, monetize what you can, save, and of course, cooperatives are very strong in times like this. Thank you very much, Mr. Kalu Aja. Always a pleasure interacting with you, financial analyst, for these very interesting conversations around the Monetary Policy Committee, impact on households. Monetary policy and households, very important variables. How do they mix? And of course, we'll be looking out for the decision tomorrow from the MPC, if what you say would come true, but very, very incisive to keep tabs of that. Thank you very much once again for the time.
Welcome. Thanks for having me. You have a good day.
Thank you. Thank you. To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage further on this program. Until we come your way again, enrich yourself with the knowledge of socio-economic developments around you. It is wise. I'm Ottoabasi Abasiekong. Thank you for watching and bye for now.